Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, February 21st, 2017, and this is the daily report for gold and silver. We do have the precious metals complex nominally lower in spite of a tremendously strong US dollar. There's actually buying in the market, although you wouldn't see it by the net price change today. Gold, for example, 1237.10. This is most active April's futures contract, trading off about $2 on the day. The low on the day has been 1226.80, and the high on the day has been 1240.20. So we're much closer to the high than the low. The low was created in overseas trading last night when we saw tremendous pressure and gold trading about $10 lower. As I said, this is all in light of a much stronger US dollar. When we take a look at the dollar, I've just pulled that up, 101.38, up about 0.4%. So considering the fact that we have buying in the market, that buying in gold is simply put not enough to compensate for the strong US dollar today. Very, very similar activity, although it's trading off nominally at 17.97, off about 1/3%. The low on the day is 17.81, and the high 18.07 currently, just 3 cents shy of $18 per ounce. So traders, absolutely no question about it. We have seen this market exhibit some extreme volatility and at the same time some real strong resistance coming in just above these highs, which sit roughly at about 1242 to about 1245, this being 1247 here. We can absolutely see that over the last 9 trading days, we have seen at least 2 occasions, one occurring just last week on the close, of course, in which the market traded to a high of roughly 1242 and came down. Something that occurred in terms of the market the first week of February, the same kind of action where we saw these extreme headwinds. Now, as I said on Friday's show, unless we see the market really close above this particular price point, and we've identified this as being a pretty strong area of resistance at 1242, I cannot with any good conscience believe that we're going to see higher pricing. At the same time, I still am maintaining, unless we see technical data that negates our current models and assumptions, that inevitably we will see gold continue to rise and rise to at least 1280 per ounce. And that is simply based upon a one-to-one relationship between the rally that began end of last year, beginning of this year, $100 rally, and the subsequent rally right now that began really towards the 3rd week of January. And in that current rally, which is what we're looking at now, I believe we've had a series of legs. We had a rally leg up. We had a 38% retracement. And then we had this last attempt, but this attempt stalled, which is perplexing. But considering what is going on in the marketplace with the Dow Jones and U.S. equities trading to all-time record highs, and the fact that we have a strong dollar re-emerging, that explains on a technical basis why that's happening. But what that will do to our model is still something that we'll have to see. But what we could be seeing, of course, is that kind of a compression within the market in which we start getting a series of lower highs and a series of higher lows, something like this, trading out to the apex and then breaking, of course, very hard in either direction. So for right now, obviously, our recommendation is to stay flat in the market. We are currently without any active trades. I want to wait and see how the market reacts at this particular area. In other markets that we look at, and I know I sound like a broken record when I say this, but the Dow Jones Industrial Average is closing at yet a new all-time record high, up 118 points, 118.95 at 20,743. As you know, I'm on record looking for the Dow to move as high as about 22,000 over the next 6 months. And the key right now is the fact that we've already seen about a 700-point move above that 20,000. We're quickly approaching 21,000, and we've done that at lightning speed. Now, the net change up about 0.6%. When we look at the NASDAQ is up about a little shy of 0.5%, but still trading dramatically higher, up 27 points at 58.65. And then the Standard & Poor's, that is also trading higher today, up over 0.6% at 2366.59, putting it at yet a new record high and a new record close on the day. I believe this being for the 9th day in a row. So traders, in other markets that we follow and of extreme importance, especially to the price of gold, it's got to be the US dollar, because it's been recent dollar strength that has been putting a damper on any kind of a rally. Realize that when we look at the overall net change in gold today, even though it was down about $2, the $2 negative print is coming after a $5 positive move in gold, but a $7 negative take in gold due to a strengthening US dollar. And you can see that on this daily chart. We've had an impressive upside spike in the market. You can see that we've moved back up to a point where we are really well above any kind of resistance that we could have encountered here at our 38% retracement level, which comes in roughly at 101.5 or 101.15, excuse me. Our next real level of resistance doesn't come in till about 102, 102.15 in that area, and that is a 23% retracement. And so traders, if a strong dollar wasn't enough really to put downside pressure in the precious metals markets, well, specifically gold, because there is an industrial component to silver, but if that wasn't enough, that strong US dollar, take a look at the Dow Jones Industrial Average. This, of course, candlestick format. It is a weekly chart, and of course, it's only traded one a day this week. Today, yesterday being, of course, President's Day, and therefore you do have a pretty small bodied candle. But look at this breakout above, just a gap above the closes that we saw for last week. Last week, it opened with a gap above the prior week. Of course, all of this coming after the market had found some real headwinds on a weekly basis for a couple of months as it staged below 20,000. And when it finally released above 20,000, there was a major move up and away. Traders, absolutely no doubt, we have seen the market have that push-pull scenario with the dollar really providing some downside pressure, statements by the Fed providing some downside pressure, an election going on in France, that really supporting gold pricing. So we've got that push-pull, but with that strong US dollar, we absolutely have a salmon swimming upstream. As I said on Friday's show, unless I effectively see a close above a 1242, I cannot really initiate a long position in the market. We're still showing support at 1220. We're still showing resistance at 1240. And until we break one way or the other, I cannot with any strength recommend that we go in from the long side. So for today, my recommendation is to remain our neutral stance. We do not have any active positions, but I will look to put on a position as soon as our parameters have been met. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.